The difference between a business name and a company limited by shares is fully explained by C&V Advisory in this video. Almost all new business owners often have a lot of questions about the difference between a registered name and an incorporated company limited by shares, and which of these best suits their business needs. And based on this fact, the major differences between a business name and a company limited by liability will be briefly discussed below. Number 1. A company limited by shares is a separate legal entity that is distinct from its shareholders and directors. It can sue and be sued, own properties and other assets in its corporate name. A business name, on the other hand, has no distinct legal personality from the owner and can sue or be sued only in the name of the owner of such a business. Number 2. A company limited by shares is required to have a director or directors and shareholder or shareholders, while a business name is only required to have a sole proprietor or partners. Number 3. A company limited by shares can have a maximum of 50 shareholders, while a business name can have a maximum of 20 partners except for law and accounting firm. Number 4. A company limited by shares is required to file returns at Corporate Affairs Commission and hold annual general meetings, while a business name is not required to hold general meetings before reaching its decisions. Number 5. A limited company may choose to go public and be converted to a public limited company, whereas a business name can only be converted to a limited liability company. Number 6. A company limited by shares is a taxable legal person and pays its taxes to the Federal Inland Revenue Services (FRS) in its corporate name under the Income Tax Act. A business name does not pay taxes to FRS. Rather, it is the proprietor of such a business that is required to pay taxes under the Personal Income Tax Act to the State Board of Internal Revenue. Number 7. A business name is automatically dissolved upon the death of its founders unless there are other surviving partners to carry on the business. But the limited liability company cannot be dissolved upon the death of the shareholder. The other director of the company will continue to carry on the business upon the demise of any shareholder or director. And where the company has a single director or shareholder that died, the family of such person can apply for a letter of administration or probate to take over the shares of the company and appoint a new director. A limited liability company will not be dissolved until it has been officially wound up with the Corporate Affairs Commission in accordance with the law. Number 8. A company limited by shares is appropriate for medium scale to large scale business, while a business name is appropriate for small scale to medium scale businesses. Number 9. A company limited by shares obtains a certificate of incorporation and other documents such as memorandum and articles of association (MEMATs) upon registration with the Corporate Affairs Commission. This is important as most organizations and government agencies require this document to award contracts or do business with a company. A business name, on the other hand, obtains a certificate of registration of business. It is limited in capacity to bid for big contracts from government agencies or other corporations. Number 10. A company limited by shares acquires a legal personality upon incorporation. The liabilities of the shareholders of the companies are limited by the number of shares that have been allotted to such shareholders that have not been paid for in the event of shutting down. What this means is that if the company has debts or liabilities, the debtors cannot go after the personal asset of the shareholders of the company, as they are only liable to pay for the number of shares that have not been paid for. However, if a registered business name goes bankrupt or runs into debt, the debtors can sue and recover their money from the personal asset of the owner of such a business. 11. A company limited by shares is required to have a director and shareholders, while a business name is only required to have a sole proprietor or partners. Conclusion: all of the above are distinctions between the business name and the company limited by shares. However, it is important to know that there is also a similarity between the two forms of business entities in line with the Companies and Allied Matters Act 2020, the law governing the business formation in Nigeria. Either the company or business can be set up by just a single person. For both registration of business name and a company limited by shares, contact us at C&V Advisory right now. And for more legal advice advisory information, you can follow us on all social media handles at C&V Advisory, and for consultation you can call the number on the screen to book an appointment right now.